Hello, fellow financial enthusiasts. Before we dive in, remember, we are not financial advisors and you should always do your own research. Today we will be exploring a fascinating topic: the historical performance of two significant financial markets, the traditional stock market and the emerging world of cryptocurrency. We'll be comparing and contrasting their growth, volatility, and overall trends over the years. So, without further ado, let's delve into the world of finance. First, we must understand the stock market, a place where buyers and sellers trade shares of public companies. Now, you might be wondering, how did this all start? The concept of a stock market dates back to the 12th century when French courtiers de change were managing and regulating the debts of agricultural communities on behalf of the banks. This practice eventually evolved into trading shares of companies, and thus the stock market, as we know it, took shape. Fast forward to the 17th century, and we find the establishment of the first stock exchange in Amsterdam. This was a game changer, a place where investors could buy and sell shares of companies, and this concept spread across the globe. As we venture further into the history, the stock market has been marked by periods of highs and lows. The Wall Street crash of 1929, for instance, was a significant event that led to the Great Depression. Yet the market rebounded, demonstrating its resilience. More recently, we've witnessed the dot-com bubble of the late 90s and early 2000s, where the explosion of internet-based companies led to a market boom and subsequent bust, and who could forget the financial crisis of 2008? These events have shaped the market, teaching us valuable lessons about risk and reward. But if we look at the big picture, the stock market has shown an upward trend over the long term. Despite the periods of volatility, it's been a place for financial growth, with the S&P 500 index, for example, providing an average annual return of around 10% since its inception in 1957. Through all of this, the stock market has proven to be a cornerstone of the global economy, facilitating business growth and offering individuals the opportunity to share in that growth. It's a testament to human ingenuity and our collective belief in progress. The stock market has shown resilience and growth over the years, despite periods of volatility. Now, with this understanding, let's delve into the world of cryptocurrency in our next scene. Stay tuned. Now let's shift our focus to the new kid on the block, cryptocurrency. The concept of cryptocurrency was born out of the financial crisis in 2008 when an individual, or perhaps a group of individuals, operating under the pseudonym Satoshi Nakamoto, introduced Bitcoin. Nakamoto's vision was to create a digital, decentralized currency that didn't rely on a central bank or government. Fast forward to today and we see a whole new world of digital assets. From Bitcoin to Ethereum to thousands of other altcoins, cryptocurrency has exploded in popularity and value. But it hasn't been smooth sailing. Cryptocurrency, much like the high seas, is known for its volatility. One day you're riding high on a wave, the next you're plunged into the depths. This volatility can be traced back to several key events. In 2013, Bitcoin experienced its first major crash, dropping from a high of around $1,300 to just over $100 in a matter of months. This was largely due to the shutdown of Silk Road, an online black market that primarily used Bitcoin for transactions. Then in 2017, there was a monumental rise and subsequent fall. Bitcoin reached an all-time high of nearly $20,000, only to crash back down to around $3,000 a year later. This was due in part to increased regulation and scrutiny from governments and financial institutions worldwide. Despite these bumps in the road, cryptocurrency has shown a steady upward trajectory. Bitcoin, for example, has grown exponentially from its initial price of less than a penny to over $60,000 in 2021. The rise of cryptocurrency hasn't just been about the potential for massive gains, it's about the potential for a new financial system, one that's decentralized, secure, and accessible to anyone with an internet connection. But as with any investment, it's crucial to remember that past performance is not indicative of future results. Cryptocurrency is still a young and volatile market. It's risky and it's not for everyone. Cryptocurrency has shown significant growth and volatility in a relatively short period. Now that we have a basic understanding of both the stock market and cryptocurrency, let's compare their performances. To begin with, let's talk about returns. Historically, the stock market has provided a yearly average return of around 7 to 10% once we adjust for inflation. This has been fairly consistent over the past century. Cryptocurrencies, on the other hand, are a wilder beast. Take Bitcoin, for example. If you had invested $1,000 in Bitcoin in 2011, you'd be sitting on a mountain of money today. But remember, past performances don't guarantee future results. Now let's move on to volatility. In the stock market, prices can move up and down, but these movements are usually more gradual and predictable. With cryptocurrencies, you might wake up one morning to find that your investment has either doubled or halved overnight. This volatility can create opportunities for high returns, but it also comes with higher risk. Speaking of risk, that brings us to our next comparison point. The stock market has been around for centuries, and it's regulated by established institutions. There's a level of protection there for investors. Cryptocurrency, in contrast, is a relatively new player in the financial world. It's less regulated, and while that can mean greater potential for profit, it also means greater risk. If a cryptocurrency company goes under, there's often very little recourse for investors. Diversification is another key point to consider. The stock market offers a wide range of sectors and industries to invest in, allowing you to spread your risk. In the world of cryptocurrencies, while there are over 5,000 different cryptocurrencies, the market is heavily dominated by a few big names like Bitcoin and Ethereum. And finally, let's talk about accessibility. Both the stock market and the cryptocurrency market are becoming increasingly accessible to the average person. You can buy stocks and cryptocurrencies from the comfort of your own home, thanks to online trading platforms. However, cryptocurrencies take the edge here, as they can be traded 24 hours a day, 7 days a week, while most stock markets operate on a 9-to-5, Monday to Friday schedule. In conclusion, the stock market and cryptocurrency each have their own unique advantages and disadvantages. The stock market offers stability and a long track record, but it may not offer the potential for the same high returns as cryptocurrency. Cryptocurrency, on the other hand, can provide incredible returns, but it is far more volatile and risky. While both have their pros and cons, they offer unique opportunities for investors. So, whether you choose to invest in the stock market or cryptocurrencies, it really comes down to your personal risk tolerance, investment goals, and doing your own research. Always remember, investing is not a guaranteed way to make money, and it's important to only invest what you can afford to lose. To wrap things up, let's summarize the main points we've discussed. We started by exploring the stock market, a time-honored institution where companies sell shares of their businesses to raise capital. We've seen how it has been a reliable wealth-building tool for investors over the years, offering steady growth and dividends. However, it's not without its risks, as market volatility and economic downturns can lead to significant losses. Then we ventured into the dynamic world of cryptocurrency. This digital asset, powered by blockchain technology, has been making waves with its potential for high returns. Its decentralized nature offers a degree of freedom from traditional financial systems, and its potential for growth can be astronomical. But remember, with great potential comes great risk. Cryptocurrency's volatility can be a double-edged sword, leading to massive gains or equally significant losses. In comparing the two, it's clear that both the stock market and cryptocurrency have their unique advantages and drawbacks. They represent different approaches to investing, with the stock market offering stability and dividends, while cryptocurrency provides potential for rapid growth and decentralization. But here's the kicker: the choice between the two isn't necessarily a binary one. Many savvy investors diversify their portfolios, balancing the stability of stocks with the potential of cryptocurrency. Whether you're team stock market or team cryptocurrency, remember, investing is a journey, not a destination. Make informed decisions, stay patient, and always be ready to learn and adapt. And that's a wrap on our comparison of the stock market and cryptocurrency. By now, you should have a better understanding of these two investment avenues, their historical performance, and how they might fit into your financial strategy. Remember though, we're not financial advisors, so it's crucial to do your own research and make informed decisions that best suit your financial goals. If you found this information valuable, I'd really appreciate if you hit that like button. It helps reach more people and keep you motivated to produce more content like this. Don't forget to drop a comment down below with your thoughts or any questions you might have. We love hearing from you. Ensure you hit the subscribe button and the bell notification icon to stay updated whenever we upload a new video. You definitely don't want to miss out on our upcoming content. Thanks for watching, and until next time, happy investing.